As we reach the midpoint of 2023, the housing market here in Frisco and nationally continues to surprise. Resilient is the word I keep hearing to describe the current housing market. I mean, if you think about it, not that long ago, in fact, just last fall, there were all kinds of reports and calls for a housing market crash in 2023. And believe it or not, it now looks as though the worst may actually be behind us. So, in this housing market update for June 2023, I want to share with you the latest news and information, paying special attention to mortgage rates and home prices. So, if you've been considering buying or selling a home in 2023, you are not going to want to miss this. We're going to dive into it right now. Hi, this is Andrew with the Andrew Smith team here in Frisco, Texas. And many of those predictions about a housing market crash in 2023 were made as mortgage rates crossed 7%. The assumption at that time was that things have now become so unaffordable that people would simply stop buying homes. And with that lack of demand plus increasing supply, the number of listings had been going up at that time. You'd have all of this supply, no demand, and prices would come crashing down. And I have to say that while there has been a definite and noticeable decline in buyer activity when mortgage rates cross 7%, there's still enough demand out there relative to the supply that we currently have to limit any sort of downward pressure on home prices. I mean, from many of the news reports that you might see or read, the perception that many people have is that nobody at all is buying homes. And that's just simply not true. Here's a graph from Showing Time, which is a service that tracks activity in different properties. And as you can see right here, although the amount of traffic out there is down compared to the last 2 years, we're still substantially higher than what we were for the month of March, which is what this the data for this chart is looking at, from 2017, 18, 19, and 20. You know, with regards to mortgage rates, one of the questions I get all the time has to do with is the mortgage rate going to go up now that the Fed raised rates? And contrary to popular belief, when the Federal Reserve raises rates, it doesn't directly impact the mortgage rates. Mortgage rates are actually tied to the yield on the 10-year Treasury bill. Now, historically, there's a spread between the 10-year Treasury bill and the mortgage rate. And in general, if you go back over the past 50 years, that spread has been about 1.72%. I've got that up on the screen for you here. Here's showing it all the way back to 1972. And you calculate that spread out, and it comes out to 1.72%. Now, the only time that spread has increased above that historical average is during periods of really high inflation or a lot of economic uncertainty, both of which, as you know, have been in play here and across the country, basically since the entire second half of last year. So if we go to 2023, here's what happened to the spread between the Treasury bill and mortgage rates. As you can see, we started the year with a spread of 2.7%, and it got all the way up to, as of the end of May, 3.2%. So that's an average spread of 2.96, so substantially more than the historical average. Now, as the inflation numbers continue to improve, because inflation is the enemy of long-term mortgage rates, and you also had an agreement reached in Washington last week with regards to the debt ceiling. So with that in mind, we should, and it is widely expected that we will, see mortgage rates fall in the second half of 2023. What is not known or not too clear right now is if we'll get back to the historical average that we've usually seen, or will that spread going forward stay a little bit more elevated? So Odetta Cucci is the deputy chief economist for First American, and here's what she had to say. it's reasonable to assume that the spread and therefore mortgage rates will retreat in the second half of the year if the Fed takes its foot off the monetary tightening pedal and provides investors with more certainty. However, it's unlikely that the spread will return to its historical average of 170 basis points. So a basis point in this case, 100 basis points is the equivalent of 1%. So some of those risks are here to stay. So the question becomes is, although falling mortgage rates would be welcome news for would-be home buyers, falling rates will actually more than likely put upward pressure on home prices. And the reason for that is many of the potential buyers that are out there that put everything on hold, went on pause when mortgage rates jumped. When those rates come back down, those buyers are going to come back into the market. It's a kind of a phenomenon we're dealing with right now called shadow buyers, right? There's a lot of people out there that want to buy that have put their home search plans on hold for the time being. What we do know is that supply is definitely low. We are undersupplied. Currently here in Frisco, we're only running at about a 1.4 months worth of inventory. Remember, 6 months worth of inventory is considered a balanced market. So you can see how short on inventory we actually are. So with limited inventory, falling mortgage rates bringing buyers back in, that will cause increasing competition on the homes that are available for sale. And so with that in mind, specifically on home prices, questions about what the future holds for home prices is what I'm asked more than any other, especially over the past several weeks. Home prices are gauged by looking at changes in the median sales price on a year-over-year basis. And while this will provide a general idea of home price trends, it's not necessarily the best way to gauge current market conditions. And there's a couple of reasons for that. For one, the median home price is always going to see fluctuations. The median home price is simply the middle price. So let's say you have 100 homes listed for sale, or 100 homes on the market, or 100 homes that sold, I should say. They just go and look at home number 50. That's the median price of that data sample. So as you can see, as the type of homes change from month over to month, the median price is also going to fluctuate. Some months there may be a higher percentage of higher priced homes. The next month you could have a higher percentage of lower priced homes. So the median home price is always going to be impacted by that. The other thing to keep in mind about looking at sales prices is sales prices are a lagging indicator. They're looking at what happened in the past. From the time the sale is reported, that home was listed and went under contract, could be 45 days, 2 months prior to that. So the data is telling us what the market was doing back then, not what it's doing right now. As a matter of fact, in the description below, I have a link to a video I put out that kind of compares leading and lagging indicators and marries those two things together to give you a better idea on where prices here in Frisco are going to go. Now, month over month price change comparisons do give a more accurate comparison of current pricing trends, because rather than comparing, let's say, March of 2023 to March of 2022, these month over month calculations are basically looking at March of 23 compared to February of 23. What's the change doing there? Here is, I'm going to show you a chart right here. So here's the percentage change in home values month over month as reported by Case-Shiller, FHFA, and CoreLogic. And as you can see, we all know that prices increased rapidly in the first half of 2022. Then, as they all show, we saw price declines in the second part of 2022. And then as we hit 2023, you can see at the far right side of that graph there that the prices are back, the bars are back into the green, indicating that month over month prices are increasing once again. Now, although they calculate things slightly differently than Case-Shiller, FHFA, and CoreLogic, Zillow are also reporting a very similar thing. So here's a look at the month over month percentage change in home values according to Zillow. So again, they show something very, very similar. You have declining prices in the latter part of 2022. And now you can see that you've got green bars appearing on the far right side of that graph again, showing where we are in 2023. Rather than declining home prices or a crash in 2023, many of the experts are now actually revising their home price forecast up. Here's what CoreLogic now believes home prices will do in 2023. As they say, or Selma Hepp, she's the chief economist at CoreLogic, says recent trends suggest that home price growth in 2023 will fall in line with historical 4% annual averages. So that's a far cry from the 20 to 25% decline in home prices that were being forecast just 7 or 8 months ago. Turning our attention directly to Frisco, year over year, we're still showing home prices are down about 6.6%, but they've generally been trending up since last November. So what you've got now is you've got year-over-year price declines, but the market has actually stabilized, turned a corner, and we've actually had median sales price trending back up again over the past few months. And one of the ways to gauge where home prices are heading in the future is the list price is more of a leading indicator. And I know list prices can change, but when you take a look at list prices and then also take a look at the percentage of the original list price homes are selling for, I can tell you that here in Frisco since January, buyers are finding that they have less negotiating power. There's far fewer incentives that they were, and they're having to pay much closer to list price than they were. As a matter of fact, in May of this year, homes were now selling for an average of 99.6% of list price. So the median list price, though, is something that has been trending upwards here in Frisco. All right, so this screen that we're looking at right now is from my Frisco weekly market report. So if you don't get one of these reports, I've got a link to it directly below in the description. You can subscribe to it in the upper corner right here. You can search any city or zip code of interest to you, and it's going to give you all kinds of real updated information about your market that's updated each and every week. All right, so let's take a look at the median list price. Here's what I'm talking about. So this is from January through June of this year. The solid line is a 90-day rolling average, whereas this dotted line is the 7-day average. It's measuring it every 7 days. So you can expect that there will be more volatility in that. But the only thing I want to point out here is you can see the median list price in January was right down here around 700. And we've now come all the way up to June 2nd. The 7-day average list price, or I'm sorry, median list price is now 797. So you can see that list prices here in Frisco are definitely trending upward. As I just mentioned, homes are selling on average right now for 99.6% of list price. Those are the homes that are going to be closing in the next couple of months. So we're in June. Those are going to be closed sales that are not going to be reported until August, late August. Some will even go into September. So that kind of gives you an idea of where the pricing in this area is currently trending. So I hope you found this information useful. And there's definitely some uncertainty with regards to the overall economy, without a doubt. But as I just showed you, and from other information that I'm getting, there's nothing right now to suggest that we have any sort of hiccup or crash or correction coming in our market. I can tell you that the market here in Frisco remains exceptionally busy. As I've been out with people looking at homes, and for the homes we've been listing for sale, there's a lot of people out looking. So this information, I share it with you in the hopes of just getting you an accurate assessment on what's going on in the market today. If you have any questions whatsoever, or if there's anything at all that I can help you with, there's a link directly below to schedule a call with me. Or as always, you can send an email to andrew@theandrewsmithteam.com, or just try and reach me at 469-296-5230.